Hello, folks. This is Raj Sastry from Raj Option Trading. Today, I want to talk about one of my favorite stocks. It's a digital turbine, or ticker symbol is apps. It's as of March 10th, 2021. And they're in technology software application area. And there are some images from a Digital Turbine website. They're in the business of helping people to discover the applications, download the applications, and they will make sure the applications are reaching the users effectively, and they're also making sure the advertising in those apps are reaching the end customers and users properly and effectively. So with that, digital advertising is a very good market. With COVID-19 crisis, the global market for digital advertising is going to grow rapidly with the compounded annual growth of 10.3% over 2020 to 2027. And it's even growing more rapidly in countries like China and some other growing countries. This is according to PRN News. And now we'll look at what Digital Turbine does. Digital Turbine, they simplify content discovery and deliver it directly to the device. And they're mainly into, the not the iOS, mainly into Android platform. And they work with the operators like AT&T, Verizon, and Telefonica, and they also work with the OEMs like Samsung and all these the phone maker themselves. And they will basically help to enable better track and measure advertising effectiveness, and help these brands like Target or Domino's or Booking or Facebook to reach the customers and make sure advertisements are done effectively in those apps. So it's a very nice area, growing area, and these guys are doing really well. And if you look at the company's profile itself, their stock price is around $85. They help people to discover new apps and content and make sure advertising is done very effectively. And the shift of going away from traditional advertising to digital advertising is really, really helping them very well. And their stock price is around $85, and their market cap is $7.6 billion. And 95% of the employees approve the CEO Bill Stone, which is a very good rating from employees. And if you look at the stock chart, very nice stock chart. I think this company caught fire in 2020, and they've done nicely, and they've kept their momentum so far very well. And a little bit about the CEO Bill Stone. Bill Stone was previously SVP of Qualcomm, and before that he was with smartphone application storefront provider Handango, and he was also in with various career relationships with wireless content marketing distribution, and he worked at several operators like Verizon, Vodafone, AirTouch. So as you can see here, his background in this mobile area and also with the operators is really helping him tremendously because he has got the relationship. He can work with these carriers and also these app builders, and make this more effective. And a little bit background and news from digital turbine. They acquired a company called Triapodi for 22.5 million in cash. They also agreed to acquire company called Ad Colony, and they also got upgraded by Roth Capital. So very good news in the market. Everybody's liking this company. Wall Street loves it because it keeps growing and being more effective. And there are some good competitors like Google Marketing, Adobe, SharpSpring, Viant, and bunch of other companies. But these guys are clearly, setting themselves apart from other companies and breaking away from the competition. From a performance perspective, with all this rotation from technology, they got hurt last week, but now they're recovering pretty nicely. Up to 1 year, they got 1097% performance, which is astounding performance in 1 year. And year to date, just last 2 months or so, 34.18%, which is very nice. Um, Now let's go into little more details about the company and see why it makes sense. From a fundamental perspective, this is a quarterly view. We got 12/31/19 all the way to 12/31/20, 1 year's worth of data. And from market cap perspective, as you can see here, clearly very nice acceleration with a little bit bump along the way, but off late very nice acceleration all the way from $1 billion back in June last year to $5 billion as of 12/31. Very nice acceleration. And from a revenue perspective, they are growing revenue 36, 39, 59, 88. And if you look at last 2 quarters, the revenue growth is triple digits, 116%, 145%. That clearly tells me these guys are really growing the market share and grabbing the market share from other competitors. And they've been surprising Wall Street with a positive revenue surprise all along, with the exception of 12/31/19. And on the EPS side also, they are surprising Wall Street last 3 times and in line before. And steady gross margin around 42%, from 38 to 44%. Very nice gross margin, very steady. They're even increasing it off late, which is good. And they're making money. So there's a positive net margin, which is also good. And one thing I always watch out for the companies is the R&D, research and development. These guys are spending money on research and development. They know that's a differentiator in this market. So that's one thing I love to see. And from a cash perspective, they got good amount of cash. I also looked at their earnings statement. Looks like they also have some credit arrangement with the some of these bankers, which is a good story. Gives them financial flexibility to take on the product development area. And they have some debt, as you can see here. I think they got some more debt as we go forward. And from a valuation perspective, from a price to earnings perspective, it's a little pricey, but you can expect stocks like Digital Turbine to be pricey from a price to sales perspective, because if you look at the revenue growth, it's a very good revenue growth. It's not crazy expensive, but a little bit expensive. And from a price to earnings perspective, it's 137. Typically we don't measure these growth companies using PE ratio. We typically look at ratios like price to sales ratio or PEG ratio, some of those things. But I just mentioned the P ratio, which is getting a little bit expensive for the folks who typically look at value stocks. They do have earnings per share, which is a good sign. They're constantly increasing their earnings per share, and the shares outstanding is pretty steady. If you see a huge spike in shares outstanding, that's an alarm. But in this case, shares outstanding is pretty constant, not a issue. The things that I really like is the revenue growth, which is very good. I hope they can keep the pace here and the momentum, and the EPS, which is again very good, nice gross margin. So from a earnings perspective, they talked about their guidance. From a guidance, they're guiding between 298 and 300 million for the next 2021 fiscal year. So which is kind of in line with what they're doing now. Which they want to be cautious when they give the revenue. This is back in 12/31. I think they gave this on February 3rd. So they wanted to be a little bit cautious. And they're also doing well from a gap, and a EPS perspective. So I just want to put it out there because they're not projecting a huge revenue growth for FY21, but it's kind of in line with what they're doing. Maybe they want to surprise the street as we go forward. So overall, I like the fundamentals, really nice company and growing very nicely. Now let's look at some of the performance aspects and see how it's doing. Before we go into performance, if you look at the earnings highlights, From a fiscal year financial highlight perspective, they did about 88.6 million in third quarter, 146% annual growth. Very nice growth here. And the application media revenue increased by 58% year over year. That's a good story. And they're also diversifying the revenue strategy. So this is very important. They have to look at multiple areas and diversify. And they also have a growth when it comes to net income, 278% growth. And they're also growing their cash, which is good. And application media, their software is installed in 65 million devices. This is mostly all the Android devices, which is good. Gross margin is 43%, which is also nice. And from an outlook perspective, we talked about 298 to 300, which is kind of in line with what they're doing. Maybe they want to surprise. So overall, from a finance highlight perspective, I feel good. Company doing the right thing. They're giving good guidance to Wall Street, and they don't want to, give a huge upside guidance, but they want to give it in line and then beat as we go forward. With that, it's a nice earnings guidance. And now we'll go into performance. From a performance perspective, this is not a new company. This company has been there for a while. First, let's look at a yearly performance. From a yearly performance, what you can see from this chart, in 2021, so far, last 2 months, they have done 32%, from a share price appreciation. Very nice. In 2020, they have done 693% appreciation, which is very good. 2019 to 89, and 2018 2%, 2017 163%. So before 2017, this company did not do much. They did like hit and miss for most part. And also, if you look at the stock price, look at the swing here, right? In 2020, the lowest price is $3.73. Highest price is 59.71. So that's why, this company, you don't need to run and buy today. You can wait for the pullbacks and it will surely come. Buy in a pullback and you'll be a winner. Now let's look at monthly performance. From a monthly performance, as you can see here, in March, they're a little bit down with this rotation out of tech stocks into value and the recovery stocks. That's why, right now, I would wait for a little bit pullback, even though it pulled back earlier, but now it's heading up. And, February, Jan, November, they did very nicely. That's why I would wait for a pullback. And if you look at October, they pulled back 12%, 29% back in March. This is around the COVID time frame. They had a pullback from December all the way to March, and again a pullback in September. So in a nutshell, pullbacks will come if you're patient, and I would buy on a pullback. Next is weekly performance. So as you can see here, they do have, in 20 February, somewhere here, I think it's after the earnings announcement, it came down a little bit. Most probably, analysts were expecting, more or a better guidance for 2021. That's why it must have pulled back a little bit. But overall, whenever it pulled back, it always went up, which is a good sign. Next, let's look at the daily performance here. As you can see here, I think somewhere here they came up with the earnings and it dropped after the earnings. They're recovering. In a nutshell, when they drop, especially after the earnings, they always recover. And even in March timeframe during the COVID, it pulled back and bounced back again. Story here is really this stock is known for ups and downs. You can always wait for a good entry point and then buy and keep it for a long time. Next, we'll look at a quick chart, a monthly performance chart. See how it is. This chart is organized in a way. We got all the years 2021 all the way to 2010. And then we got monthly performance, December through January, every month is here. So what I'm looking for here is really look at a year like 2021. The low price is 78, high price is 87. 50% appreciation in so far. Um, so I'm looking for any pattern I can spot here, and I also highlighted the March, June, September, December. These are the quarter ends for this company, and typically March quarter will close. In April they will announce earnings. So as you can see here, typically there are patterns you can watch out for. So typically after the earnings, they will kind of go down a little bit. So for example, September earnings dropped a little bit, and March earnings, I think they dropped here also a little bit. This is generally the COVID-19 impact. I would not attribute this to earnings, but generally you could see the pullbacks. If you look at 2020, you have three good pullbacks. 2019, you got few major pullbacks here. 2018, you got some major pullbacks. So with this stock, I think you can wait for the pullbacks and buy on a pullback. And also, if you look at the range here, 2021, 78 to 87, that's a good, about $10 range here. 2020, there is a huge range, about $53 range. And 2019, there's a huge, $7 type range. So, there is a good trading range for this company between high and low. You can always wait for a good entry point and buy on a pullback. Now let's look at insider trading, what the insiders are doing. So by looking at this, I do see there is a option exercise, 25,000 shares, not a big deal. And somewhere here we got $2 million sale. It's again account chief account officer. And I think some of these are really not a big deal because these execs sell occasionally. I would not be concerned about this, nothing huge here. Next we look at the stock chart itself, and we looked at fundamentals before. Now let's look at the technicals. From a technical perspective, here we got various moving averages, the last one being 200-day moving average. We got 100-day moving average, 50, 25, and 10. I think they kind of dropped below the 25-day moving, 50-day moving average, and they bounced back. So I would think somewhere here 58, 50, they can't go below this typically. They will always here they hit 100-day moving average, bounced back. So typically around 50 to 100-day moving average, they will hit and bounce back. That could be a good opportunity to buy. This is a 3-year chart, by the way. And let's now look at some of the technical indicators. See what do we see from a technical perspective. From a technical indicator perspective, this is a 18-month chart. One day, stock fell pretty hard, and then they bounced back. And as you can see here, the implied volatility itself is low, meaning if somebody wants to buy even call option, maybe with 70 delta or higher, you could buy because IV rank is pretty low. And if you look at the DMI, the blue line here, trying to go up and try to cross over the red line, that's a good sign. Companies really showing some momentum, from a DMI and ADX perspective. And from a on the balance volume perspective, people are buying the stock. So especially with this pullback, people are buying the stock. That's a good sign. And from a Chaplin money flow perspective, I think money flew out of the stock because typically when there is a huge drop, people get scared and they will sell the stock. That's why Chaplin money flow is indicating a little bit lower. But I don't just look at Jacqueline money flow. I also look at the on the balance volume. So because volume is going up, that is telling me the people are really buying on the weakness. That's why it's trying to go up at this point. So those are the few call outs. I like the on the balance volume, which is going up. I like the DMI, the blue line trying to cross over the red line, which is a good sign. And in the due time, chocolate money flow will pick up. I think it's a little bit lagging at this point, but it will pick up. Next, we'll go into what do we do now. Now we looked at the fundamentals and technicals. What should I do? Before I go there, this will also look at one more aspect of the technicals. This looks at the stochastics itself. From a stochastic itself, it's the blue line here is trying to go up as it crosses the red line. It's a good sign that stochastics perspective it's doing well. And from a MACD perspective, I can see the blue line trying to make its way up. We are catching it a little bit early in the game. And also accumulation distribution is really nice. It's really in the higher range, which is a good sign. So overall, from a technical perspective, it's in a good shape, and stock is really trying to do nicely. Now, from a conclusion perspective, what should I do now? I got some money to invest. Should I buy, digital turbine or apps right now? So, so few key takeaways, right? Partners and advertisers, they love this company, and this company is really partnering with all these partners and having some, making sure the partners and advertisers get the value for their money, and they're also diversifying their revenue, which is again good thing. And their revenue growth is very consistent. As you can see in the previous fundamental chart, they have triple digit revenue growth in last 2 quarters. They've got steady gross margin, and the organic growth, they got both organic growth as well as growth through acquisitions. So what I would recommend, as of now, today, stock price is around $85. I feel it will be good to buy on a pullback. But if you want to open a small position, watch and buy on a pullback, it's good too. This stock clearly gives you opportunity and to buy on a pullback. So I would recommend buying on any pullback and initiate small position, keep adding to your position as the stock pulls back. With that, I love this stock, Digital Turbine. They're into this great area of digital advertising. Happy investing. Thank you.